Hello friends, welcome back to Trading with Hariom. Today we will talk about one of the most talked about private sector bank in India, and that is Bandhan Bank. This stock has gone through a roller coaster ride, falling nearly 77% from its peak. But the big question now is, has Bandhan Bank finally turned a corner or are challenges still looming large? Let's break it down in today's detailed case study. A quick recap of Bandhan Bank's journey. Bandhan started in 2006 as a microfinance company, giving small loans to people who could not get loans from the big banks. In 2015, it got a banking license and became a proper bank. In the beginning, the growth was very strong, very low NPAs, high profit, and a fast branch expansion. But later, too much focus on microfinance loans and too much presence in the West Bengal created the big risk. When the COVID came, many small borrowers could not repay and the NPA went up sharply. Now the big question is where things went wrong. Over the 3 years, three main issues started hurting the bank. First one is too much reliance on microfinance loans which are very risky. Second one is high geographical concentration, especially in West Bengal, exposing it to political and local risk. Third one is stress during COVID, when small borrowers could not repay, which causing high NPAs. By FY21, gross NPA went up 7% compared to just 0.15 in its early days. Now you might be thinking, if all bad happens, then what management is doing? To fix this problem, Bandhan decided to reduce its dependency on risky loans and diversifying into housing finance across India, retail secured lending including vehicle and gold loan, and wholesale banking including institutional and corporate lending. This shift is visible as of June 25, nearly 60% of its advances are secured and diversified loans compared to just 51% a year ago. Now let's look at the fresh quarterly update from the management. First one is loan book. Gross advances stood at 1.34 lakh crore, up 6% year on year, but slightly down quarter on quarter. Importantly, the EEB portfolio shrank 15% year on year, while secured portfolio like housing, wholesale and retail grew strongly. Retail assets alone jumped 78% year on year. Second one is deposits. Deposits are growing faster than loans, up 16% year on year to 1.55 lakh crore. Retail term deposit grew 34%, showing that the bank is building a solid liability franchise. CASA stand at 27%. Third one is asset quality. Overall gross NPA is at 5%. Net NPA at 1.4%. But the stress remain in the EEB book where the GNPA is still 10%. Other segments like housing 3.3%, wholesale 3.4% and retail 1.4% are showing improvement. Fourth one is profitability. Q1 FY26 profit after tax was 372 crore, lower than last year due to heavy provisioning in microfinance loans. However, operating profit actually grew 6% sequentially. Net interest margin stood at 6.4%, slightly moderated because of the shift towards the secured loans and the lower yields. Now let's see who's investing in Bandhan Bank. FII increased to 24.34% in June 25 from 22.73% in March 25. That's an increase of 1.61%, which shows that foreign investors are building confidence. Under the DII also increased to 16.52% in June 25 from 16.36% in June 25, slightly increase of 0.16%. Under the public shareholding, which went down to 18.14% in June 25 from 20.86% in March 25, a fall of 2.72%. This is good because of weaker public hands are reducing and stronger hands like FIIs, DIIs are increasing. Management explained that microfinance book will stay weak for 1 or 2 more quarters, but the second half of FY26 they expect recovery. They also gave guidance loan growth for FY26 should be around 15 to 17%, mostly from secured loans. Cost of funds will come down due to retail deposit and RBI rate cut. Credit cost of guidance is around 2.5% in FY25 with expected to improvement in Q3. We have watched almost everything, but now the big question is what to watch going ahead. I have split the 4 parts. First one is the bank is moving strongly towards secured and diversified lending. Second one is deposits are growing well, especially retail deposit. Third one is asset quality outside microfinance is improving. But the fourth one and the last one, which is the biggest problem, is still high NPAs in the microfinance segment. Now I'll discuss technical chart pattern. Bandhan Bank stock is down nearly 76% from its lifetime high. After COVID, it had recovered around 170%, but since then it has been moving only in a downward direction. Now if we look at the chart, a triangle pattern can be possible, but for the triangle, the condition is 2 resistance and 2 support. In Bandhan's case, we have only 1 support till now. Management has said that microfinance book remain weak for 1 or 2 more quarters, around 190 days. If within this period the stock has touches 1 more support, then the triangle condition will be satisfied. So the big question is, will Bandhan Bank form the second support in the coming days and also complete this triangle pattern by your side? Let me know your views in the comment below. Please take this chart pattern as a study purpose. This is not a buy sell call. So friends, Bandhan Bank is no longer just a microfinance bank. It is slowly becoming a diversified bank with a stronger deposit and a better balance sheet. But the final test is, can it bring down the 10% NPA in the microfinance loan? If yes, then it can recover. If no, then the pressure may continue. That's all for today's case study. What do you think? Please let me know your views in the comment below. We'll back in next video. Till time, happy investing.